Hey everybody, Courtney Smith here. We're just rocking and rolling here at Wall Street Winners. What can I say? And here's your rock and roll disclaimer that's, wow, what can I say? It's really hitting the beat here. All right. Upcoming events. Well, actually, I'm in the middle of doing the May 19th and 20th two-day income. I'm here in Las Vegas in our tricked out classroom. We're doing this course. Fantastic. Loving it. Great people. Coming up in October, Futures and Forex Masterclass in Dubai. All right, let's talk about the market. So we got a little bit of a dip in the market. That's really no big deal, just a normal kind of a dip. So we could maybe get down to 2660 here on the S&P, and that would be meaningless. You can see the purple predictor is bullish and really staying very, very bullish. So there's really no reason to expect from pure price action for this market to do anything other than continue to move higher after maybe a short dip. Now, let's take a look at our ADX indicator in the upper right-hand corner. So if you look very, very closely, you'll see that the DI plus, the buying pressure, and the DI minus, the selling pressure, are on top of each other. They're equal. We've reached an equilibrium in the buying versus selling pressure. And that tells us that we're just in a trading range. And if I look at the chart, I can see that we're at the same price we were in April, March, February, and last December. So really, we've gone nowhere since last December. Net, that's a trading range. And that means that we still have to, we don't have to be panicking. It's certainly not going to be a major bear market. But on the other hand, it's just a sluggish type of bull market. Now, as I've said, we are in a market of stocks, not a stock market. And what that means is that there's lots of stocks going up, lots of stocks going down, lots of stocks going sideways. So our superior stock picking ability enables us to make money in a market. Even though the market's going sideways, we own, for our fully paid up members, we own stocks that are generally going up. So we're making money in this environment. Now the Nasdaq, similar story, a little bit of a dip, bullish, purple predictor. So look, overall, these indices are looking pretty darn good. Now our seasonality indicator is wildly bullish. I mean, it would have to go down below 150, 150 before I would pull the trigger and say that the bullish seasonality is over. Now, we would have expected the bullish seasonality to end in April, and here we are in May, and we're still moving higher. Well, that can happen. Just because the seasonality is sluggishly bearish doesn't mean that we can't have the market move higher. And in fact, if the market moves higher, when seasonally it should be going lower, that's a very bullish thing. Because it means come September, October, when the negative pressure is taken off from the seasonality, this thing's going to explode. Now look at what the seasonality is in the fourth quarter. I mean, that's a big bull market. That's a 10% rally in the fourth quarter alone. And if we are continuing to move higher or sideways during this period, this could end up being 12 or 15% in the fourth quarter alone. The yield curve is ceasing to be any kind of a negative thing. It's really turning into a neutral right now. Asset allocation, very strong, showing that the stock market is attracting money away from bonds. Of course, that's bearish for bonds. Now, the stock market RISKDICATor moved to a new all-time high. And the reason this is important is because it says that market participants are saying, you know what? Let's rock and roll. Let's go buy some risky stocks. Let's not go to safe havens. Let's go make some money. Let's buy. And that's bullish for the stock market. Global shares breaking out to new highs, but I'm still not that interested. Now the bonds, as I say, bonds, money's flowing out of the bond market. We had another gap down here, moved down to new lows. We got down to the old lows we made in February. We got a little bit of a rally on Friday. Purple predictor still above the price action, so that's not making it super bearish. So what do we do when we put it all together? Well, we have to conclude that the pressure is on the downside, but it's not going to be a slam dunk. It's going to be a struggling bear market, and that we might stabilize right around this area because this is where the old lows were back in February. Now, you can see the green line, that's the 10-year Treasury. It's made new highs. And it's made it largely on the back of the blue line and the chart itself. The blue line is the 10-year Treasury in Germany. Now, notice that the yields in the U.S. have made not new all-time highs, but they made new multi-year highs. But 10-year Treasury yields in Germany are below where they were at the beginning of the year, and they're below where they were at the end of 2015. So they're not going up as much. U.S. interest rates are going up strongly. Now, if U.S. interest rates are going up, then that hurts the gold market. But the CRB, which is the chart itself, is going up, suggesting that inflation is coming. Now, if bond yields are going up, that means the U.S. dollar is going up. Now, last week, we told you the retracement zone is the red box. I'm still looking for the retracement to get down there. We didn't get down there last week, which I thought we'd probably continue lower, and instead we exploded to new highs. Clearly a bull market, but guess what? All bull markets have retracement, so we should see a normal retracement, which would be a tremendous buying opportunity. I'm still bullish on the dollar, largely because of the stronger economy in the United States. The lower tax rates make investing here more attractive for foreigners, and the interest rate picture is more. We can see that interest rates are going up in the United States, not going up anyplace else, and that means that money is flowing into the U.S. Now, if the dollar's up, gold is going to go down. Now, I thought that we would just bounce around the bottom here of this big sideways rectangle formation that we have been in. And we did bounce around it for a couple of weeks, but this last week we broke down. This is significant from a technical perspective. I've already shown you one reason why fundamentally gold is going to be under pressure. So now we've broken down from a technical perspective. It's going to be hard to get back up above the 1305 area on gold, and the downtrend line is going to cap it and keep us in a bear move for now. I don't want to go short gold because it's just not that great to go short. But what we have is a gigantic rectangle formation, and we're going to see the price of gold go down into the low 1200 area. I'm saying about 1230 to 1240 is our downside objective. Well, that's $50. That's a lot of money in the gold market, given how unvolatile it is. Now, our indicators also not that great. The top one, the euro, is bearish. The bottom one, the yen, is very bearish. The middle one, the CRB, is kind of neutral. So net, our fundamental key critical factors are bearish for gold. Oil, on the other hand, as I've been telling you now for a couple of months, I'm getting more and more bullish on here. And I went into more detail last week. Look for oil to go higher. And if you look at our portfolio for fully paid up members, you know that we're long a lot of oil-related and energy-related stocks. They're making us good money. Now, Bitcoin, I told you we would drift lower. We're drifting lower. And I continue to expect us to drift lower at this point. Look for us to get down around 7,000, something like that. But I'm not bearish yet. I've told you I think we're going to get down below 5,000, but not yet. Look at that blue line. That's what we call the purple predictor, but unfortunately on this chart service, it's the blue predictor, and it's showing very strong strength. And that shows that the smart money is buying Bitcoin. So this drifting lower price action, yeah, it can go on for a couple more weeks, but the purple predictor is telling us that this market is going to rally up and get up to that 11,600 level. So if we can get it down around 7,000, that might be a good area to start to think about buying Bitcoin, looking for a $4,000 rally in it. So we're going to keep a close eye on this because there could be some pretty big profits made here. All right, that's it. All you freebies, love having you here. Fully paid up members, hang in there for just a second.